So what a complete mess today. Yesterday was Boxing Day, December 26th. Canadian market was closed, but the US market was open and the Dow Jones rallied 1,000 points. And today, as you can see on this little chart here, the Dow Jones was down all day, almost even reaching 600 points. But it finished the day probably in the last half hour in the positive, while the Canadian market was up all day. So it seems like the Canadian market was up all day just because the American market was up yesterday, and since the Canadian market was closed, it didn't have a chance to be up yesterday, so it's compensating by being up today. But then at the end, the Dow Jones finished the day also in the positives, but in the greens. As you can see, it was down all day. So just a complete mess, does not make any sense. Still creating a lot of buying opportunities. I mean, Pizza is now down close to a 52-week low, 8.39. This pays a ridiculous amount of dividends, 10% per year. Personally, I'm not too sure if it's sustainable because they are paying a lot of their profits out in dividends. So I'm not too sure if it's sustainable, but for those who want to take the risk, it's definitely a good dividend paying stock. Apple reaching 146 on Monday and today reaching 150, low of the day, but closed at 156, really making it an excellent buying opportunity. Amazon reaching 1332 on Monday. Still not the 52-week low. The 52-week low is 1167, but closing today at 1461. So much movement even in Amazon. The Keg Royalties Income Fund pays pretty good dividends, 7%, also down. 52-week range is 15 to 20. Trading right now at 15.78. It last traded at 15.54 back in 2014. So you could say it's pretty much at a 5-year low. Getting destroyed on this stock, United States Steel. Bought this at $22 or 21.8. Bought 100 shares of it, but I did sell covered calls. The first month, collected probably 5% on this. It was pretty good. But now next month, it'll probably be a little bit harder to sell covered calls because I'm definitely going to be going to be far from the $22 I bought it at. So I'm going to have to choose a strike price probably closer to 19 or 20 and hope that my shares don't get called away, or else I'm going to be losing close to $2 a share if my shares get called away at a $20 strike price, for example. So if we look at the options, let's say we look at the February 15th expiry date. I mean, I could sell the $22 strike price because I'd still be making money if I'm able to sell it at 50 cents. Even 23 was doable, but it's going to be a much smaller return, but at least a safer strike price in case my shares get called away. Since I bought it at 21.85, I need to choose the right strike price because the strike price basically is the price at which my shares could get called away. So my shares could get sold at that strike price if the stock price surpasses the strike price plus the option premium. But if I want to take the risk and sell the $19 strike price and just hope that the price of the stock does not surpass 19 plus 137, for example, so it does not surpass 20.37, then I could collect 1.37 times 100 minus the $11 fees divided by a 21.85 investment. So that would be a 5.7% return in 1 month. But I risk selling my stock at $19. So that's why I'd have to pick a strike price probably closer to $22. But it depends on how I feel about the direction of the stock come expiry date, and also depends on the price of the stock come expiry date. So the US dollar is increasing compared to the Canadian. So if I have funds in Canadian and I want to buy a US stock, I have to really be careful because I'm going to be converting at a pretty high price right now. So if I ever want to convert back to Canadian, I have to make sure that I'm at least above 1.36. So now I'm trying to pick more Canadian stocks right now just to avoid converting at this high price. Ford is getting destroyed. I mean, I've got call options that I bought on this and they expire in January 2020. So I really need this stock to reach $10 in exactly 1 year. If it doesn't, I could pretty much lose everything I put in those call options. I bought Google at $9.95, so great to see it at $10.43. At least finally something positive. ExxonMobil is a true disappointment. Bought it at 75. It was actually trading at 66, and now 69. Had a chance to sell at 81. Johnson & Johnson was trading at 123 this week. It was a good buying opportunity. So yeah, so a lot of stocks rallied back this week, or yesterday and today. But we'll see if the uptrend will continue, or if we're gonna see even lower prices next week. JP Morgan Chase, Kraft Heinz, Costco reached 193 but closed today at 201. Walmart was trading in the 80s as well. Berkshire Hathaway was trading at 187, the Class B shares, but it closed at 200. So just in 2 days, you had a good buying opportunity. Square was also trading close to 50, but closed today at 56. CIBC pissed me off today. I had an order today at 99.5. Here, let me show you. The order was in my RSP account. So here, buy order 10 shares at 99.5, and today's low was 99.51. So I missed out by 1 cent. And I put this order when it was trading at 99.7. So I just rounded it off at 99.5, my limit order, and instead it reached 99.51, so I missed it by 1 cent, and it closed the day at 101.06. So it would have been already up 2% if it had gone through. But we'll see what happens if this stock continues to go up, or if it's gonna reach even lower prices next week. We'll see. But definitely want to buy any Canadian bank stock. Personally, I'm mostly focusing on CIBC, BMO, and Bank of Nova Scotia. I find that they've dropped from their 52-week high the most, and they pay over 4% dividends. So FTN, I was looking at this at 3.5. Today it closed at 4.4. So there's a lot of movement on the Quadravest products. So this was at 3.5 this week on Monday. So imagine if I had bought it at 3.5 and let's say sold it at 4.41. So it would have been up 26% already in 2 days. But we'll see what happens. It might drop some more. But this is definitely something I want to buy at around $3. Maybe put in $1,000. So Suncor as well is something I want to buy at around $35. I mean, this is almost like a 10-year low. If you look at the max, last time it was trading at these prices was, you could say 2014, so 2016 as well. So this is a 2-year low or a 3-year low. But the highest it was trading at was $54, and that was July of 2018. So obviously the price of oil, the barrel, is affecting this stock, but definitely a good opportunity. Almost 4% dividends. And if I'm able to buy 100 shares of this, let's say even at this price, I personally want to buy it at $35, but let's say I buy it at this price, 100 shares, that's going to be $37.57. Here, let's look it up on Questrade. So if I buy the January 18 expiry date, so that's not even a month, that's like 3 weeks, expiring in 3 weeks. And if I buy it at $37.57, so the stock strike price of 38, for example, it would be somewhere in between 107 and 122, the call option. So let's say 115. So I'd get 115 minus $11 divided by the investment of 37.55, for example. So that's a 2.7% return in 3 weeks just by selling the covered call. And I could keep doing that every month. If I do that every month, for example, that's 33% return by keeping the stock and just selling covered calls every month, and obviously getting the dividends as well, the 4% dividends, and any potential capital gain if I decide to sell the stock. But obviously my shares, there's a risk that my shares get called away if the stock surpasses the strike price of 38, for example, plus the call option that I collected. So for the first month between now and January 18, the only way I would keep my shares is if the stock price of Suncor does not surpass 39.15 between now and January 18. So if that doesn't happen, I get to keep the shares and I can repeat the process. But yeah, everything rallied today, so I'm gonna wait a little bit. I'm not gonna buy right now. But basically any big name company is a good purchase right now. Either the Canadian banks or energy stocks. Enbridge as well was looking good. It was trading at 39. On Monday was trading at 39. Pays right now 7% dividends. So this as well is a great stock for dividends, and potentially also selling covered calls if you're able to buy 100 shares. So let's see what the call option is at. So let's say January 18 expiry date, and let's say we even buy it at this price. I wouldn't buy it at this price. I'd buy it a little bit lower. So the strike price of 42, sell it at 90 cents, for example. So 90 minus $11 fees divided by the 4113 investment. So that's close to a 2% return per month, and that's about 23% for the year, plus the 7% dividends, plus any potential capital gain. Yeah, Goldman Sachs was trading at 151 on Wednesday, so definitely a missed out opportunity. This is a stock I wanted to buy at 155, but right now it's already at 165, so this is something I regret I didn't take action earlier yesterday, but we'll keep an eye out. We'll probably just place a buy order on it so that it gets executed automatically if it reaches 152, for example, right now. Boston Pizza also reaching some 52-week lows. Pays pretty good dividends, close to 10%. So maybe I'd put $1,000 in this one also, as well. Manulife as well is looking good at around $18. It reached 18.33. Would also be good for pays 5% dividends, and also would be good for selling covered calls as well. I think I had calculated this already. Would give me around 2% per month. The next expiry date, let's say January 18. If I buy it at 19.07, I'd probably choose either the $19 strike price or the $20 strike price. Let's go with the $19 strike price. And let's say we sell it at 70 cents. So 70 minus $11 fees divided by a 1910 investment. So that's about 3% per month. But of course, your shares would get called away at $19 if the stock surpasses 19.7 between now and January 18, and you wouldn't make any profit from selling the shares. You would have only made the 3% return. But even a 3% return per month, if you could do that every month, that's amazing. So that's 37% per year. So you would get the 3% return in 1 month. You'd get your shares back, and then you have available cash to buy something else and just repeat the process. But if you're looking for a more passive investment, obviously just buying stocks that pay dividends, buying them cheap, buying them at 52-week lows is obviously a great strategy. So you could buy Manulife at 18 or even 19 and just keep collecting 5% dividends per year. Eventually the dividends will increase and the stock price will also increase, so your initial investment also grows. BMO, Sun Life, other great, Bank of Nova Scotia, Cascades as well, dropping below $10. Also good opportunity for capital gain, but as well selling covered calls every month. So yeah, just so many stocks to buy, so many opportunities right now. Personally, my plan right now is just to wait a bit, just to see what's going to happen, just to see how much available cash I have, and make sure not to use everything right now in case the market continues to drop. But at the same time, if the market goes up, I want to take advantage of these new low prices. So let's say I have $10,000 available cash. I'll probably try to spend $5,000 now buying some of these stocks I mentioned, and then wait to see what happens. If stocks continue to drop another 10%, then I'll probably use the other $5,000 to buy more stocks. If they don't drop another 10%, they just go back up, well then I would have participated a bit with the initial $5,000 I put in. And there's always new opportunities that come. So yeah, that's my plan right now. But we'll see what happens tomorrow and next week. So if you have any questions, leave them in the comments below. Like always, if you're going to trade on the stock market using Questrade, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. And I get asked a lot, where do we enter the referral code? If you go to Questrade, click open an account. When you pick the account that you want, here you have the option to add offer code. And this is where you would add the referral code, and then you click apply, and then you continue with the application. Very simple. And if you enjoy my videos, please click on the like button, share with your friends, and subscribe to the channel. And in January, as soon as the 2018 year ends, I'll be coming out with videos showing all my capital gains for the year and all the dividends that I received for the year as well. Thanks for watching.